I'm Charlotte McLeod with investingnews.com, and here today with me is Joe Cavatoni, market strategist Americas at the World Gold Council. Thank you so much for being here. Great to have you.
Great to be back, Charlotte. Thank you.
Really good to be checking in with you today. The World Gold Council has just released its latest gold demand trends report. So I thought we could start by taking a high-level look at demand in 2023 for gold, perhaps comparing back to previous years. And I know we have numbers for demand, including OTC and excluding. So I wondered if you could just give us some general context there.
Absolutely. I think everyone started 2023 expecting a world of rate cuts. It didn't happen. I think everyone was expecting not a lot from gold. I think geopolitical and systemic issues supported the price. As a consequence of everything that played out over the course of 2023, record-setting year in terms of total demand, tracked by the World Gold Council, of 4,899 tons. And that includes the OTC number. Now, that large OTC number, which has been one of the largest numbers we've seen in a while, gold trades as an OTC asset, not on an exchange. Some instruments do, but the large volume of gold trades over the counter. And sometimes those consumers are not as easy for us to nail down or put into a category that is commonly tracked, whether it's jewelry or central banks or exchange-traded funds, but we are confident in the number. We actually feel good about that number. It's a large number, but it's pockets of investment, whether it's sovereign wealth funds or maybe high net worth individuals or family offices. We've heard anecdotally, those are the types of people that have been consuming gold in large ways, and that's likely to be the type of people that are making up that number. But again, record-setting year in terms of our overall demand, and actually surprising again to the upside in terms of performance for 2023.
Okay, good to go over that to begin with. And as I mentioned, there's lots of points that we want to follow up on. And I think the first path that I want to go down is central bank buying, because all throughout 2023, I was hearing how strong it was, how much they seemed to be buying. So good to look back and see what the actual number came in at, and also to learn which central banks were standout buyers this past year.
That's right. I think, again, this is a 14-year trend now. So again, net buying by central banks, net on a 14-year trajectory. 2022 was a record-setting year, just over 1,100 tons. We were close to that. I should say it's about 1,085 tons in 2022. We were close to that record again in 2023 at 1,037 tons. So about 45 tons away from another record year. You might remember in September of 2023, we were on track to hit a new record at 800 tons in the central banking community. But that number, again, very strong in 2023. And those banks that continue to be the largest consumers of gold in the reserve portfolios and disclosing those holdings include the emerging market central banks, China, Poland, Turkey. You see this pretty widespread in the emerging market central banks. So those are the big buyers. Those are the big names that continue to be strong supporters of the gold market.
Yeah, really interesting to see. So almost at that record 2022 level, very exciting. And I'm going to ask just a small follow-up question there on China, because I know that people always ask about this when they see it mentioned. So China emerged as the largest central bank buyer of gold in 2023. I think people always wonder, though, about the accuracy of the numbers coming out of China. So any thoughts that you would share there for investors?
Well, I think the thing that people need to have an appreciation for is with our partners that help us to accumulate and put together our reports. We go through a rather thorough and comprehensive exercise to get the data validated. And we rely on IMF reporting, which China adheres to. And when they have these validated numbers come forward, we use those to give our information to people. And where we are concerned or questioning accuracy of certain numbers, we will err on the side of conservatism. And not to forget one thing, on an annual basis, we do survey different central banks, maybe 60 this year that we'll have, and that survey will come out in May. So if you want more information around their mindset and their aspects of how they're looking and holding gold, so again, validated data through normal and confirmed channels, but also qualified and validated further with our survey report that comes out every May.
Very good. Okay, thank you for going over that. And of course, I think what people are going to be wondering now is, after this year of high central bank buying in 2023, what is 2024 looking like it's going to shape up for central bank buying of gold?
I think the central bank case for the central banks to continue to add gold to their portfolio, in particular, the emerging market central banks that have large dollar and euro exposure, continues to be a strong case. Like we felt last year, we don't know exactly how much capacity they will continue to have to make the investments. So we'll see how that works out over the course of 24. But again, the rationalization, whether it is a looking and feel around how they want to manage their dollar-based exposure or dollar-based assets, dealing with their own homegrown inflationary concerns and challenges, maybe geopolitical risks that are also weighing in on their decision, that need for liquidity in their portfolios, and even the concern that some might even have around the increasing level of potential for sanctions to impact their overall position. Those are all factors that are going to continue to strongly support the case for central banks to be buying. Remember, the central banking buying has been something that has been a very strong support for the gold price on the downside. So while we haven't had as much of a breakout moment as we'd like, even though we did hit a record level for LBMA fix during the course of 2023, we're very comfortable and very happy with the fact that the demand that comes from central banks is supporting us on the downside.
Right. And one more point on central bank buying of gold, just because it's been so top of mind, I think, for investors this past year. There's, of course, so many factors that impact the gold price, but I've heard frequently mentioned that it's the central bank buying that has really acted to support the metal. Do you have that sense as well in terms of price support?
Yeah, as I've just indicated, we know that central banks are active. We know that they have buying programs that are sophisticated and robust. And we often get confirmation through validation that they put out in terms of their own reporting that they've been buyers when prices start to dip. So we again feel that they're going to be a large component of what's going to play out in terms of the overall consumption. And again, this is not something that's just last year or 2022. This is, again, a net trend for 14 years. So we've been seeing this for quite some time.
Yeah, I'm so focused on this immediate report, but it's good to remember looking back quite a long time, this is a theme. So really good to go over that. Okay, so getting away from central banks, of course, their buying was strong in 2023, but over on the investment side, it fell to a 10-year low this past year. And I believe that's largely due to ETF outflows, also a little bit lower in terms of the bar and coin demand. So let's look over at that and maybe what that means in terms of retail investor demand for gold.
Right. So I think the story in exchange traded fund land is that it's a small component of the overall gold market, but a really good, transparent component of the overall gold market. And it does give you a sentiment of how people are looking at asset allocation in their portfolios. But it is not the only component that makes up gold as investment. So you pointed out bars and coins, and we'll talk on that for a moment. But the story in investments in exchange-traded funds has been outflows both in Europe and the U.S., the two largest markets by far in terms of overall demand for gold. And actually what we saw in the tail end of 2023 for the ETF market in the U.S. was that expectation that maybe the rate cuts that could be coming in 24 potentially developing. And ultimately, we started to see the pace with which outflows and maybe even some turning into an inflow market taking place in the U.S. The European market is still a larger flow of outflows in terms of overall activity. One last point on exchange-traded funds. The Asian market, India, China, are the two largest markets that have exchange-traded funds outside of the European and the Americas. They had inflows over the course of the year, small relative to the other markets. Now, bars and coins actually very interesting because that's a very unique story that's developing differently in different parts of the world. China, India, strong performance. There you see maybe a drift away from jewelry as a consumable asset and more into investment savings in those markets, which has been a strong story for 2023. Lots of reasons why that might play out in China in terms of the overall state of the economy, the strength or weakness, I should say, the renminbi. Flipping to the Western markets, Germany, really disappointing year in terms of the overall flows, down 75% in terms of the overall demand levels that we were expected to see. But in the U.S., quite a surprise to the upside. So you hear a lot of people talking to the fact that ETFs and demand is down for gold in the investment space. But the exception is that pocket of 113 tons of demand that came in the form of bars and coins. So maybe it's really truly retail that's buying. There's a big story about gold getting consumed through Costco. And I think that kind of gives us a little bit of a signal that, hey, look, there are people that are still putting savings and money in that form of investment to work in the gold market. And it shows in terms of bars and coins. But again, the institutional and the more institutional-minded kind of flows in the ETF space, they're definitely moving around trying to figure out where opportunity cost is going to land for them.
Right. And just as you pull out those different statistics in terms of different regions, we often hear about the East-West divide in terms of gold demand really at all levels. But it sounds like that's maybe not quite as concrete as it always is. Is there anything you would add there?
I think it's probably one of the most interesting dynamics to play out in 2024. Personally, what I find most interesting will be to see how China develops, in particular in that investment landscape, and how the overall opportunity for us to see where rates move in 2024, particularly out of the Fed's monetary policy, and see what happens with Western demand for investment. So really an interesting dynamic. And again, I'm really excited over the fact that China and India both have developing financial markets that have gold wrapped in exchange traded funds, but also that very robust bar coin market.
So as we look forward to 2024 in terms of gold demand, what is the overall outlook? What are you expecting to see this coming 12 months?
I think a lot still hinges upon what happens with monetary policy, mainly the U.S., but also other major markets around the world. We're also keeping a very close eye on what develops out of Europe, which is somewhat behind in terms of the cycle of where they are in terms of managing the concerns of inflation. So we'll see when and how the Fed deals with where rates are and that rate cycle. That's going to give us that breakout. Right now, I think we're going to see the strong demand from these pockets that we've talked to continue to be there. That'll give us a support to the downside. But you can very simply see, another strong performance like we saw in 2023 based on how monetary policy develops. With that comes a very, very strong case for the systemic risks, the event risk, and the hedging risks that come along with a very, very volatile geopolitical landscape getting more complicated as we speak in terms of flare-ups in the Middle East, still an ongoing concern in Eastern Europe, and then also, the Sino-U.S. relations and how they'll develop. Just had a Taiwan election. The outcome's very interesting to see how that plays out. We've got a lot of elections taking place, in particular in the U.S. So you've got this strategic case to be made in terms of when and how monetary policy develops, but also you've got this tactical moving market in terms of geopolitical and political events that could keep gold very top of mind as a safe haven hedge for people. So a big, strong case for gold into 2024, and we'll see how it plays out.
Definitely. I think these are certainly topics that hopefully we can check in with you on as the year progresses. And I know the report is the gold demand trend report, but I want to check in on supply just briefly. I know it's perhaps a little bit less exciting, but I think we had supply for 2023 up 3% from the previous year, mine supply 1%. So if we could just take a look at those numbers and if you expect to see significant changes there in 2024 or kind of more of the same.
I think the things to keep an eye on with mine supply is that the development in the mining space itself is a steady, slow, ongoing increase, but that'll be more of a more muted growth rate in terms of what you would see that potentially would come in the form of recycling. So recycling, when prices are high, will bring out gold, and that will actually become a larger source for the demand or for the supply side to take into place. And that's what you kind of saw in 2023, which was a 9% increase year on year, again, supported by a strong price. So that jewelry that's laying in your drawer might come out and get recycled. That old stock of gold that might be sitting in a dowry might come out and get recycled. So those are the types of trends that we see. So we'll keep an eye on markets like India and parts of Asia where recycling is a big component of what we see. But I think if we see higher prices, we'll probably see a little bit more on the recycling side. But again, on the mining side, steady as it goes.
And just one more note on the supply side. When it comes to the miners, it looks like we might be seeing a trend of their costs starting to, I'm not sure if it's come down or at least grow a little bit less, but that seems promising if we are going into an environment of higher prices. So anything you would add there?
Yeah, look, the way to understand all-in sustainable cost, like every organization that's subject to the broader economic environment, the mining companies are going to be subject to higher prices when it comes to the price of fuel or energy to actually run their operations. I think that we're still well above their all-in sustainable cost, which is a good thing for things. But they also have, ongoing operations that they need to work with, and staffing, but they also have environmental issues that they need to be tackling. So lots of factors that weigh in on that all-in sustainable cost, but again, manageable. The other thing is that in an increased rate environment, they might be feeling a little bit more on the cost of capital as it relates to the funding. So I think it's manageable. I don't think it's going to be anything that's going to be disruptive to the space in any way. And like you said, I think the pace with which it's grown has come off a bit. So maybe rates coming off, maybe the cost of inflation coming off a bit will do us a good thing for the all-in sustainable cost.
All right. And as we finish up, I know the report is filled with different statistics and takeaways that I'm sure everyone should take some time to peruse. Is there anything else that you would pull out for investors that you think is really important to pay attention to?
I think the key factor would be don't let just what you can hear, see, and easily ascertain in the ETF market give you the full picture on the demand from investment. And second, I think that in an environment where we have pressure from a rate environment and an opportunity cost that's putting headwinds on gold, because of these diverse different ways that gold gets consumed, you can see 2023 is a very strong case for why you have to look deeper than the surface for this asset to understand how it gets, how its price performance will play out over the course of any period of time. Demand from these different sources, including technology, which we didn't touch upon, but look, it fell a bit in terms of tech, but it's still a key component that makes up that broad universe of demand. So I'd say dig below the surface and understand the real drivers, and it's all very clearly, easily understood in the report.
Very good. Thank you so much. Dig below the surface. I feel like there's a pun in there, but I don't know if I can pull it out. Thank you so much for coming on to go over what's in the report. We'll include a link in the video description for people to check it out if they would like to, and hope to check in with you again soon as 2024 goes on.
Thanks.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Joe Cavatoni with the World Gold Council. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.